Good day, all, and welcome to this little voiceover on gross income. In specific, it is a section within the taxation sphere, and I'd like to discuss what is gross income, what is the definition of gross income, and how would we apply this to a scenario if you were an individual and a salaried person, for example. So I'm going to discuss a little bit of what the definition of gross income is, what is gross income, how do we then apply these requirements and definition of gross income in a real life scenario, for example. So let me continue. If I haven't introduced myself, my name is Ruwaida Musa, and yes, let's go to the next point. Okay, so what is the requirements of gross income? Gross income, definition of gross income in terms of Section 1 of the Income Tax Act defines it as follows. Gross income in relation to any year or period of assessment means, firstly, in the case of any resident, so there has to be a resident, there has to be a total amount, that means there has to be a rand value attached, it has to be received in cash or otherwise, also has to be received or accrued to in favor of such resident. So it has to be for that particular individual, has to be during a period of assessment or such period of assessment, and it has to exclude any receipts. Anything that you receive must exclude capital in nature. Even if you receive it or it's accrued, cannot be capital in nature. So let's recap that again quickly. What are the requirements of gross income? Gross income is in case of any resident. 1. Total amount. 2. Cash or otherwise. 3. Received or accrued to in favor of such resident. 4. During the year of assessment. 5. Excluding receipts or accruals of a capital nature. 6. So there are 6 requirements of gross income. I think at this point it's very important to reflect on this. So once you have an understanding of what is gross income and what constitutes gross income, all of these requirements, all of these 6 requirements must be present or must be ticked for an amount to be included in an individual's gross income. Let's go on to the next slide. So we say we can identify 5 requirements, actually 6 requirements that must be present in the definition of gross income. Again, the salary, we said, a summary, it's the resident, total amount, period of assessment, received or accrued to of a capital nature, and you must be a resident, for example, and there must be actually an amount. Okay, so let us quickly do an example now that we have the requirements that must be present in a definition of gross income. Okay, quick example, let's just quickly run through this. So Nala Mayoni is 27 years old, so it's an individual. She visited the Kruger National Park for a holiday in July. One night while sleeping in her bungalow, a lion visited her campsite and damaged her vehicle. Nala submitted an insurance claim and the vehicle was assessed as a write-off. The insurance company paid an amount of $220,000 on 1 August to replace her vehicle. So I want you to think about this. Let's quickly go through this. Nala, 27 years old, visited Kruger Park in July, 15 days in July, so it's in the year of assessment. She had some damages done to a vehicle. Question, vehicle, capital, revenue in nature. Let's continue. She submitted an insurance claim during the year of assessment. There was an amount received by her. Yes, there's a rand value, 220,000. When was it received? In August. Sounds, in the year of assessment, replace a vehicle. So the discussion question around this is this regarded as gross income for Nala? Discuss in terms of the gross income definition whether this amount that Nala received from the insurance company would be regarded as gross income. And I'm sure that by now, after listening to this few minutes of this voiceover, it is going to be quite simple if you try and do this on your own and then look at the answer. The requirement says, is this in case of a residence? Yes, Nala is a resident of South Africa. We've told you that. Is there a total amount in cash or otherwise? Yes, there is an amount of 220,000 and as there is a specific amount. Was this amount received by accrued to? Yes, this amount was received by accrued to Nala. I'm not sure if you're following how I'm doing this or how I'm answering this or talking about it or talking through it, I would say. I'm looking at the requirements of the gross income that we discussed in the initial slides and now I'm applying it to the scenario. Okay. So we said, yes, it was during the year of assessment. Was it of a capital nature or not? Now, this is quite interesting. The amount received was for the replacement of a capital asset. A vehicle is seen as a capital asset. This amount received would therefore be considered to be capital nature, and because it is capital nature, the amount would not be included in gross income since it does not meet all of the definition or all of the requirements of a gross income definition. And therefore, our conclusion is, based on our question, will this amount of 220,000 be included in Nala's gross income? And the answer is no. It will not be included in her gross income for that year of assessment based on the above discussion. I hope that this little 5-minute voiceover has increased and enhanced our understanding of what is a gross income, requirements of gross income, and how one would apply this in a real life scenario to an individual. Thank you very much, everyone. Bye-bye.